Joining us now to share his commentary on the day's market performance is Robert Towell from Sasfin Securities. Rob, thanks so much for your time this afternoon. So President Trump issued more love letters over the weekend, targeting the EU and Mexico, slapping the bloc and the South American nation with duties worth 30%. Unlike last week, we're seeing some nervousness in markets today. Talk to me about the shift we are seeing. Is there less optimism of trade talks and Trump backpedaling when it comes to the hefty tariffs?
Well, it's very difficult with Donald Trump because he keeps increasing the tariff rhetoric all the time, and every time you negotiate you think that things are getting better, and then he just changes it again. So it's very difficult for businesses to manage their buying and selling of product. So I think that it is causing a bit of a worry across the board. Although we haven't seen markets really panic too much. We're negative today. We're not seeing a lot of volume.
Yeah.
But in general, the markets have held up quite well. So I think that they're waiting to see. I think the 1st of August, could you get another tariff tantrum like we saw in March? It's possible if there are no negotiations. But I think people are, and countries are coming to the table to negotiate. And really, what is Trump looking for in general? Is it a 10%, a 15% tariff? I mean, I don't see how 30% tariffs across the board is going to be beneficial to the US as well. So at the moment, the markets are keeping it in their stride, a little bit weaker this week.
Yeah.
But still holding up quite well.
All right, and it's also under this landscape, under this environment, this backdrop that corporates have had to contend in. I mean, earnings season kicking off this week. Just your expectations there. I mean, at this point, we thought we'd have some sort of uncertainty, but that deadline being moved again now to the 1st of August.
Yes, I think that quarterly earnings will be relatively robust. I think everybody's been waiting for inflation. We've got inflation numbers coming out for the next quarter tomorrow in the US to see if the tariffs have pushed inflation up. But US companies' earnings should be relatively firm and robust, so we're expecting good earnings. But we'll obviously look quite closely at what the CEOs say about going forward and the guidance of earnings going forward. I think that's where most people will be looking for, is the guidance that the CEOs are talking about. But I think earnings themselves will be relatively robust. The tax bill that Trump's done recently as well is quite good for large corporates.
Yeah.
So that's beneficial to also the big indices. So I think that's a positive for US companies on the tax bill side. So, I think that their earnings are going to still be good, and it's still probably the best place to invest at the moment.
And I was going to ask you about, the outlooks, the forecasts, because over the last quarter, we saw a number of companies pulling their forecasts, changing their forecasts, because, no one knew what was going to happen when it comes to tariffs. And I guess probably the same kind of rhetoric still going to play out.
Yes, I think so. I think you're going to see a lot of indecision from CEOs saying that they can't plan going forward until they know where the tariffs are. So I think that will be in the guidance a lot, and that will probably keep the market from rallying too much if there are good earnings. But I think you have to look at earnings as they are, and if they're relatively strong, companies have got good cash flow, generating profits, then you want to invest in them.
All right, some good news out of China. Positive trade data with both exports and imports rising, while exports to the US continued their downward spiral. The decline eased. Is this just on the back of, the trade truce we saw between the US and China, or are we still seeing some sort of front loading taking place?
I think there is a bit of front loading. I think people try to, if you're out of China, you started to try to import as much as you can before the tariffs came in. So I think that's why you saw Chinese exports, rally like they did. And I think it's definitely front loading. And obviously now we're going to have to wait till the 1st of August to see if you can keep that momentum going beyond. But I mean, China and the US have said they are speaking to each other. They've got some deals with Vietnam at this stage. So they are getting closer to organizing some type of trade structure, and if that happens, I think then you'll start to see stabilization in the exports from China, and still relatively firm.
In some company news out today, Rob, we saw South 32 warning of a muzzle impairment amid power supply concerns. Just your take on that update. I also saw that the share price took a knock today.
It did take a knock. I think it's slightly overdone. They have mentioned Mosul Aluminium, which is in Mozambique before, and they've had problems with electricity in Mozambique. They get the electricity from Eskom out of South Africa when Mozambique can't supply, and Mozambique is supplying them electricity from hydroelectricity, and they're battling with droughts at the moment. So it's a relatively big asset for Mozambique, but it's not the hugest asset for South 32. And South 32 have said numerous times that they might have to close that plant. So I think the sell-off today is slightly overdone. And I think that, when it comes to so many people losing their jobs, etc., governments do come to the party, and I think that will be resolved. So I think that the sell-off in South 32 is an opportunity probably to buy some South 32s.
All right, I see that share price down over 5% this afternoon. Rob, before we get into the clips, maybe let's get your take on what we've been seeing playing out on the currency front, trading at around 1788 this afternoon. In the morning, it was close to that 18 mark, around 1797. Are we seeing a bit of, the domestic risks coming into play? We've had concerns around national security coming into play, or is it really just a dollar strengthening story?
I think it's a little bit of both. I think obviously the issues around the GNU and now into the police commission, etc., obviously put some negativity on the rand, and you saw that rand go to 1790, 1795. But I think it really is mainly a dollar play. And in general, the dollar's been weak. Yes, the last week and a half, you saw some dollar strength come back. But I think it's more driven by the dollar than by local issues at the moment. I think if you had a proper collapse in the GNU, then you'll see a real big move on the rand. So I think at the moment, still led by the US dollar, and general weakness in the US dollar, barring maybe this last week.
All right, let's get into the clips before we move on to your stock pick. Let's take a moment to touch on what other industry players find interesting.
My stock pick for today is Glencore. Like we mentioned earlier on, I think there's some upside over the medium term in the commodity sector. Glencore is uniquely positioned here because it's an integrated natural resources company. They're in a whole lot of commodities such as copper, cobalt, zinc, nickel, thermal coal, and I think more importantly, they're also involved in trading these commodities, which acts as a buffer to the variability in the commodity prices. So I think at the current valuation levels, with the outlook that we have and seeing where global growth is going, I think an investment in a diversified miner such as Glencore offers upside to the patient investor.
So I am seeing upside in the South African listed construction space. I think if we look at how many players have actually exited that space over the last few years, and we could start seeing really big infrastructure projects. Well, we've already started seeing that coming through from the likes of a Sunroll, but a real concerted effort by government to drive increased investment in water infrastructure and a whole lot of other big projects coming online. I see value in both Raubex as well as Wilson Bailey Homes. Both companies are well run. Wilson Bailey's portfolio has been cleaned up. It's no longer in the Australian business. Their balance sheet has been repaired, and that stock has been a chronic underperformer relative to my favorite, Raubex, for quite some time. So I'm invested in the SA construction space. I do like Raubex as well, but my pick for today is Wilson Bailey.
So Chantal, betting on the local construction sector, a sector that hasn't been loved for quite some time here at home, betting on WBHO, but also liking Raubex. And then we have Roy going into the mining sector with Glencore. Just your analysis on those counters.
I think on the construction side, Raubex does a lot of roads. On the road side, I agree there is growth, and it gets done. On the infrastructure side, we're not convinced yet that the money's flowing 100% through infrastructure in South Africa. There's lots of promises, into infrastructure, and the project starts, but you still got construction mafia issues across the board, especially in KwaZulu-Natal. So we're not buyers of that just yet. We do think there's potential there, but if we was going to go construction, we would rather go where there's just road infrastructure and not very high civil projects. So there we would probably take Raubex before Wilson Bailey, but in both sides we're staying away from construction at the moment.
And what about Glencore?
The Glencore we like. We think that they're well priced at these levels. Glencore also just announced a share buyback again for another $1 billion. So they've got a share buyback. They've got a copper price, which is, had a good rally initially in the last few weeks. And we see that carrot continuing. Even though we've got a copper tariff, it's very possible that you're going to just see it as a mineral that needs to be bought and used as infrastructure grows across the world. So we like Glencore. They're a very good copper trader as well as an owner of copper. And coal as well, which they're a big supplier of coal, which is still used worldwide. So we like Glencore. We've bought it at these levels, and I think that's a good bet for now.
So you like Glencore, but that's not your stock pick. Where are you seeing value today?
So at the moment, we're looking at FirstRand. FirstRand's come from about 76 Rand. It's trading 72, and we're waiting for the outcome of Aldermore court case in the UK. We think that there's potential there that, if they get a favorable outcome, that the share can really rally. And if not, it's well priced at these levels, giving you a solid dividend and very well positioned for any growth in South Africa as well. So we think it's a defensive play, but if you get the right outcome in the UK, you're going to get a nice rally in the share. So we think, 69 to 72 are really good levels to be picking up FirstRand.
All right, FirstRand, one to look out for. Rob, thanks so much for your time and joining us for our market analysis at midday. That was Rob Towell from Sasfin Wealth.